Hello lovely people, I'm Kate Hill and I'm here to give you the best unbiased and honest commentary about the property markets, along with some really awesome hints and tips, so stay tuned. And before we get started today, I want to ask you all my question for the day. Are you experiencing the fear of missing out at the moment? And if so, tell me where you're buying and why are you experiencing this FOMO? And just really quickly as well, I gave one of my webinars last week with Terry Ryder from hotspotting.com.au. We discussed the prospects for a nationwide property boom for this year and beyond. And we got lots and lots of questions from you about specific areas and where the markets are heading, which ones will show the best growth and which ones to avoid. So I'm really sorry if we didn't get to your questions. We had literally hundreds, but we'll do it again really, really soon. And you can watch the video again of that webinar right here. So have a little watch there. Okay, so today I am going to cover off on the national real estate boom underway across Australia. The RBA indicates record low interest rates are here to stay until at least 2024. Low listing numbers are boosting prices and some auction clearance rates for you from Sydney and Melbourne. The latest figures from both Domain and CoreLogic show annual growth in house prices in most locations in the nation, but in particular the latest quarter. CoreLogic's price report shows that all 15 market jurisdictions, which is 8 capital cities and 7 state regions, recorded growth in January and in the past 3 months. Domain's report shows all capital cities had significant price increases in 2020 with major uplift in the December quarter. The CoreLogic figures show quarterly growth in all 15 market jurisdictions. Now that equates to double-digit annual increases if those growth rates are maintained. The Domain data confirm these quarterly rises in house prices. The smaller capital cities and the regional markets are leading the growth in house prices. Continuing the trend that became evident early in the pandemic, regional housing values rose at more than twice the pace of the capital city markets. CoreLogic's combined regional index was up 1.6% over the month, while capital city values were 0.7% higher. Since the onset of COVID-19 in March last year, regional housing values have surged 6.5% higher. I do think that this trend will even out a little bit more as Australia returns to normal, and once we do open our borders again and tourists and migrants and international students return, we should see a swing back to more normal and balanced market condition in terms of regional versus capital city markets. The RBA this week decided to keep the cash rate at 0.1% and lowered its unemployment forecast to hit 6% by the end of this year, which is down from 6.5%, which it was forecasting 3 months ago. Inflation and GDP forecasts have also been upgraded. Surprising most economists was the RBA's call to extend its quantitative easing program by buying an additional $100 billion in bonds. RBA Governor Philip Lowe says that the economic recovery is faster than expected and GDP is now expected to return to its pre-pandemic level by the middle of this year. He said that the economic recovery is well underway and has been stronger than was earlier expected. The RBA board will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. The board does not expect these conditions to be met until 2024 at the earliest. Now, I don't normally apply one fact or one rule to the Australian housing market, but we have started 2021 with low inventory levels across the board, with available supply falling way short of accelerated buyer demand. Now, we as buyers agents out there are definitely seeing this in most, if not all, of the property markets that we are buying in at the moment. There's very little stock out there, but there's real pent-up demand too. So with the housing market on a rising trajectory, buyers who did sit on their hands in 2020 are now entering the market, eager to make up for lost time. As a result, existing housing supply has been impacted by a really strong rate of absorption from the rising home buyer activity, creating a seller's market. CoreLogic estimates that the number of national home sales over the past 3 months has surpassed the previous year's figure by 24%, even with those low stock levels. The volume of regional home sales is up 27%, while capital city sales are up 22%. In contrast, the number of fresh listings added to the market nationally over the 4 weeks ending 24th of January was 3.3% lower than last year and 13% below the 5-year average. Nationally, total listing numbers, which include new listings plus re-listed properties, were 28% lower than this time last year, tracking 2% below the 5-year average. And we all know what happens when demand outstrips supply, don't we? And finally, our auction markets have returned strong results on slightly higher volumes this week, with the combined capital's preliminary clearance rate holding above 80%. Every capital city recorded a clearance rate above 70%. In Melbourne, a preliminary auction clearance rate of 80.8% was recorded across 592 auctions this week, while last week there were 390 auctions, returning a final clearance rate of 80%. 1 year ago, the clearance rate was just 68.5% across 419 auctions. In Sydney, there were 449 auctions held this week, returning that rate of 89.1%. In comparison, there were 270 auctions held over the previous week, and the final auction clearance rate was 76.7%. 1 year ago, 384 auctions were held across the city, with a clearance rate at 77.6%. Now, we do give you the best commentary and content here on our channel regards to all things property. So please let me just ask you quickly, hit the subscribe button, click the notification bell so that you're getting all those expert hints and tips around buying, owning and investing in property as soon as I post them up. If you're enjoying the free content and you are finding it useful, please click on the all important like button too. I really appreciate it, and I will see you soon. Bye.